Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
All right. Welcome, everyone. As people are dialing in, I will offer my welcome. It's Mark Yusko from Chapel Hill, North Carolina, and I am joined by our friends from Exos, Elliot David and Matt Toomey, who I found out not in a negative fashion, but it would have been kind of cool if he was not related to the famous wine brand out there. Which I think actually is under the Dunkin' name I think it's just their brand. And then I also learned that, Elliot and I kind of cohabitated here in Chapel Hill for a while his wife was in school. So we need to figure out how to make that reunion happen sooner rather than later. But welcome, guys. How you doing?
Thank you, Mark. Great to be here, and thanks for having us.
All right. So we're going to talk about this idea of clean energy mining. Now, some would say, well, that's an oxymoron. How do you have clean and mining? Well, we're going to talk about that. And, bridging Bitcoin to climate finance. And I think what's so cool about that idea is, over the last, 6 years, and particularly as we formed Morgan Creek Digital, and for those who remember, Morgan Creek Digital is an investor in Exos and partners in many of the things that they do. And one of the things that we've learned in our journey as we've gone down the path of the digital age and expanded to investing in what we call the ABCDs, right? AI, blockchain, chips, and data. Bitcoin certainly fits into that, and we've done lots of things in the Bitcoin space, as our other partnership for years with Exos on the Risk Managed Bitcoin Fund, and so lots of things. Was all throughout that period, you had to deal with increasing amounts of FUD. Now, what is FUD? FUD stands for fear, uncertainty, and doubt. Well, who creates the FUD? Well, the people who are threatened by any new innovation. So, when the automobile came out, the horse and buggy people spread FUD that, if you got in a car, you'd die. When the airplane came out, the train companies spread FUD that if you got in an airplane, you'd die. Kind of common trend. And I actually referred to it yesterday, incumbent cyanide, right? So anytime something's good and new and exciting, the people who have incumbency, who are impacted by that innovation, try to kill it. And I think that's what has been going on really for a long time, despite, lots of data and all that, which we'll talk about with the guys. So with all that as backdrop, I always like to start by going backwards. So maybe just a quick intro, guys. I always like to know, where'd you grow up and what was your thing growing up? And then we'll add the third piece to that, which is kind of what led you down the road into the digital asset space. And Matt, you can go first.
Thank you, Mark. Yeah, look, I grew up in Adelaide, Australia, which you can probably hear from my accent, and then spent most of my working career actually in traditional finance. I was fortunate enough to work at Goldman Sachs in London, and then work at Deutsche Bank in Hong Kong, where I'm actually located. That's been home to me for the last 12 years. So traditional finance, and within traditional finance, an equity called prime brokerage. My crypto journey began a little bit in 2017 when I took the plunge to buy a little Bitcoin and Ethereum. But it really began probably in 2019, 2020, especially around a transaction that happened when Tagomi was bought out by Coinbase, and this thing that I started reading about was crypto prime brokerage was becoming a bit of a buzzword. Now I thought this is something I really need to dig into and sort of double click. So that really sent me down the proverbial rabbit hole, and got to a position where I'm like, this is an industry and this is a technology that I absolutely have to be invested in and have to be participating in. And it was really a decision that, it's that the magnitude of what is going to happen is still relatively early, even though it's been around for a while, but it's going to impact in so many different ways. Started that journey by working at a large Hong Kong platform who was an early participator and called OSL. They were one of the first in Hong Kong to receive the SFC license, the equivalent of a regulatory licensing. And it was essentially talking to all the same hedge fund clients and asset managers that I had been talking throughout all my career, but now talking about something I was really, really passionate about, in Bitcoin and Ethereum at that point in time. And it was early doors where a number of the large institutions, the Brevan Howards of the world, were starting to be onboarded, and we were talking to those particular clients. And it was a really exciting time. Obviously, a lot of the early institutions were coming in. And it was there that actually, when I met my other co-founder, Brad, who was also based in Hong Kong, and started to talk about the idea of sustainable Bitcoin protocol. And, the FUD that you mentioned in the intro was probably, really peak FUD regarding Bitcoin and its energy consumption. The crazy headlines of Bitcoin is boiling the ocean is being thrown around, and really this misunderstanding of what potentially Bitcoin could mean from a clean energy perspective. And knowing my asset management background and traditional finance background, I knew the mega trend of, climate capital was only going to continue to grow in terms of its size and stature. And a lot of that at some point in time was wanting to get exposure to this new asset class, the best performing asset class. And frankly, it's been sidelined. And we were thinking, how can we build the bridge that can allow them to access Bitcoin and align their investments with their climate goals or, their mandates, climate mandates. So that was sort of the journey into crypto and the journey into the sustainable Bitcoin protocol. And we're 3 years on and super excited to share more with you and your listeners today.
Fantastic. Thank you. All right, Elliot.
Yeah, thank you for having us. Elliot David here. I lead our climate strategy at SBP. Born and bred in New York, but as Mark noted in the beginning, spent some time in North Carolina, moved around a bit. So, lived in China for a bit and in Israel, spent some time in Africa. My background's in climate sustainability. I've been in that space for over a decade. Have worked across the public, private, nonprofit sectors. Started working in energy around 2017. I went to go work for the U.S. Department of Energy under then President Trump and then Secretary. And it was a really incredible experience. Then I went to go work for the Clinton Foundation for President Clinton, working on solarizing small island developing states. This kind of long tail path of helping build clean energy infrastructure around the world. Moved to China. That's when I started to learn about Bitcoin and blockchain. At this point, a lot of the global hash rate for Bitcoin mining was in China. They were predominantly using stranded hydropower in the wet season, and then moving these portable data centers into the central sort of portion of the country in the dry season. And I would say that's when I started to really work in Bitcoin and crypto. But my sort of first introduction to Bitcoin was back in 2010. A few friends had suggested to get together, buy some of this magic internet money. I sort of thought of it as a scheme back then. They're obviously retired now, so pretty good decision on their part. Several years later, after serving in the military, I actually did some sort of international security work, and then I kind of interacted with Bitcoin again. But even then, it was still through this lens of illicit finance. Bitcoin was used as a tool by illicit actors, and it was only in like 2019, 2020 that I really started to sort of do the research, learn about the technology, what it is, what it isn't. And that's kind of when the light bulb turned on. I realized that Bitcoin is not only just sort of misunderstood, and it's not boiling the oceans as Matt pointed out, but in fact it could actually be a really powerful tool in the energy transition. So rather than just addressing the FUD and saying no, it's not boiling the oceans, in fact it could actually have a really positive effect on the environment. But yeah, that's my background and a little bit about my role within SBP.
No, it's fantastic, and I think setting the stage here for y'all to kind of explain to us what Sustainable Bitcoin Protocol is and how it does achieve exactly as you described, this building a bridge between a protocol, which if you guys can explain, we throw that word around a lot, but I think most people understand. Like right now, everyone on this call is using a protocol called TCP/IP, Transfer Control Protocol over Internet Protocol. And we're using it in the sense of something called voice over IP, which is, we're transmitting our voices over this Internet protocol. And, years ago, before the Internet, that was not possible. Our voices went across copper wires or fiber optic cables. And the, monopolies, AT&T and Verizon, charge us a lot of money for that, dollars per minute, especially if we were trying to call a place like Hong Kong or China or Europe for that matter. So here we are in this evolution of technology, and people have heard us talk on many shows before about how, computing continues to evolve and that blockchains are an operating system for decentralized compute, and that Bitcoin is a blockchain. I was, a pair of socks, right, to say, Bitcoin, not blockchain. I'm like, well, but Bitcoin is a blockchain. So they're inseparable. And then once Bitcoin started to catch on and, went from zero, like literally no value 15 years ago, to today, well over $1 trillion of value in a single protocol. Explain maybe for listeners how you go from that, okay, there's this big thing called Bitcoin, it's magic internet money, and it's a thing that, as they say, people say is, using more electricity than all the power in all of the world, which clearly if that were the case, then we wouldn't have any lights on, so it's not the case. But why the hyperbole around it? Why the misunderstanding about it? And why is it important in the context of this evolution of tech? Maybe Matt, start with you.
Yeah, look, I think to that, Sustainable Bitcoin Protocol really as a core is an incentive, a financial incentive for Bitcoin miners at their crucial choice of energy to be choosing clean energy. Now, the design of that initially is, we live in a world where financial incentives are the most powerful mechanism for change. And what we wanted to do was create a financial incentive for more Bitcoin miners to choose clean energy. Now, the way we go about that is we do that through the introduction of our token called a Sustainable Bitcoin Certificate, or an SBC, which is rewarded to the miners essentially based on a series of different data collections that we are collecting from the data from the miner. They can be the energy consumption that is used to mine for their Bitcoin. It can be the number of Bitcoin that they're mining through their mining pool. And then crucially also, it comes from understanding the clean energy procurement that the miner is using to say that the energy they're using is coming from clean energy. So we ingest all of that data, we verify that data, and we get to a place where we understand that this particular Bitcoin mining facility is in many cases using 100% clean energy. And on the back of that, considering what they have been mining for from a Bitcoin perspective, if it's 101.2 Bitcoin that mined for a particular month, the miner will then earn 101.2 sustainable Bitcoin certificates. In a slightly neat package way, we'd like to kind of consider, potentially it's proof of clean work. And it's a representation that this miner and this facility has been using clean energy to mine for Bitcoin. It's issued to them and rewarded to them separate from the Bitcoin. In no ways is it tagged to the Bitcoin or disrupts their Bitcoin that they have. It's a additional and independent asset that they have been rewarded with, and it is rewarded to them based on that clean energy that they have been consuming. So maybe I'll just pause there, and if Elliot, you want to add any comment, please do.
Yeah. So maybe I'll actually add to that by taking a step back. Why we even do this in the first place? Like, what's the point of verifying or incentivizing clean energy use in Bitcoin mining, right? Like, who's going to pay for it? Where's the value in that? And so going back to this whole, FUD, and this was pre, China mining ban. This was before Elon Musk had tweeted, about Bitcoin and ESG and all that. We recognize that there were two incentives and two mechanisms at play. So Bitcoin miners, they want to use clean energy, but there is no ROI per se in making that voluntary choice of using clean energy. They want to show that they're being sustainable. And then at the same time, institutional investors, asset managers, the funds that Matt had talked about that, have a screener for environmental investments, they want some kind of data, some kind of proof that their holdings are in fact contributing to the energy transition, or at the very least are not, contributing to climate change. And so because of, Bitcoin has this unique nature of being this centralized protocol, it's a network, not just like a commodity class, but it's actually a network. Essentially, we're connecting these two incentives. So all we're doing is we are collecting and commodifying sustainable Bitcoin mining data. As Matt mentioned, that's, energy consumption, that's pool data, that's the environmental attribute data. And the way it works is a Bitcoin miner will come to us, they'll share their data. We can then verify it. Every single megawatt hour of sustainable Bitcoin mining is fully audited. And then as Matt pointed out, for every Bitcoin or even Satoshi, the Bitcoin miner will receive an additional instrument that, again, is completely independent. It preserves the fungibility of Bitcoin, but now miners have an additional asset, essentially this proof that a Bitcoin or a SAT was mined with sustainable energy. They can then sell that to an institutional investor, asset manager, who would then add that to their own balance sheet. So the miner is actually making more money for using clean energy, and then the institutional investor can now make an auditable claim, whether it's voluntary, whether they have to comply with some kind of, ESG or, climate disclosure. So it's kind of a win-win, right? The miner gets the benefit and the investor has the assurance.
So is there some similarity to carbon credits?
Mm-hmm. Yeah, that's a question we actually get pretty frequently. So, and this is where sort of my climate finance, climate tech background comes in. There's a few different types of environmental commodities, that are recognized by CFTC. So carbon credits represents that 1 ton of CO2 has either been abated or been removed or avoided. There's also an instrument specifically designated to energy production or renewable energy production called an energy attribute certificate. In the US, North America, this is often called a renewable energy certificate. And the reason why it's important to make the distinction between this renewable energy certificate, or REC, compared to a carbon credit, is that carbon credits are, they can kind of be abstracted away, right? It's very difficult to measure whether or not you're actually removing or avoiding the CO2. But with energy attribute certificates, every single megawatt hour of green electricity produced pretty much everywhere in the world has an associated contractual instrument to it, one of these certificates. And the reason why we don't use carbon credits and we use this other instrument is very similar to why Bitcoin actually uses energy, right? Like why proof of work exists. The purpose of proof of work and the reason why Bitcoin uses energy, the reason why it needs to consume electricity to be valuable, is because it's what bridges the physical and the digital, right? The only reason why you can have this permissionless, decentralized, open monetary system is because there's some kind of sort of connection between the digital and the physical, and that's, these Bitcoin miners, these data centers that are using electricity. So essentially what the energy attribute certificate market has done for energy, we're doing for Bitcoin.
Got it.
That answers your question.
Yeah. No, it's perfect. Okay. So, as you said, we live in this world of incentives, and Matt, you spent time in that prime brokerage world, right? Which is in many ways that intermediary between the service providers, the asset managers, and the consumers. So is there a similar functionality to your platform in this commodity segment as opposed to the traditional asset management segment?
Well, for the platform itself, the asset that we have created, the SBC, does allow this additional optionality for investors. To Elliot's point, we believe there's a huge amount of sideline capital that hasn't looked to get exposure to Bitcoin because it's either climate conscious or it's mandated under climate mandates. So one of this bridge that we're speaking of is how do we introduce this new climate capital into Bitcoin? How do we allow them to have a data-backed, sustainable holding? And effectively, the protocol is trying to address that. Now, we think that is one of our core missions, and one is going to be actually hugely valuable for Bitcoin mining, but also the ecosystem to attract more and more of this climate capital into Bitcoin. But then there is probably other different orders and effects that could come on the back of that as the SBC gets liquidity and is seen as a collateral alongside Bitcoin. And once you start to think of a BTC and an SBC as collateral, then it does start to open doors to some of the other more traditional prime brokerage financing, which is one of the largest kind of reasons why prime brokers make money, and potentially introducing this new concept of sustainable Bitcoin financing, which we believe would be it could be a very powerful new segment, especially for the mining industry, as an ability to be able to tap the debt markets, which frankly right now is quite difficult for them, and then also the ability for potentially investors that have looked at green bond structures that had never thought about traditionally investing into this Bitcoin mining space or sustainable data centers. Maybe there's an opportunity to introduce that segment of investor into it, and that leans back more to the more traditional kind of prime brokerage financing that I think you're alluding to.
Yeah. So in the sustainability market, or the ESG environment, sustainability governance world, it's taken a little bit of a black eye lately, but the original construct was that companies that paid attention to these objectives, surprisingly maybe to some, but probably not that surprisingly, did better, were more profitable, stocks did better, and therefore screening on those criteria for investors could be accretive. Now, I think unfortunately what happened with ESG was it got taken to extremes, and everybody just adopted the label without requiring the underlying kind of proof. And so a bunch of the things that came out and were listed as ESG funds have performed terribly. I always describe it as like when blockchain and the like started to come into its own in 2017, 18, and 19, a bunch of ETFs tried to raise capital around, being blockchain or digital future. And when you looked at their holdings, it was Microsoft and IBM and Intel, and what do those have to do with this? But people didn't care, right? They were just trying to gather assets based on a cool ticker, and not surprisingly, those funds underperformed. So I think the original, this is a long question, but the original mandate of ESG probably did hold water, that people who ran their businesses with an eye toward being good stewards in the world, were rewarded through customer loyalty or just higher profits. And therefore, in the world of mining, I think, and don't want to answer the question for you, but I think there's a similar linkage between sustainable methods of production of Bitcoin and profitability. Is that true, false? Is there no combination or no correlation between those at all?
Yeah, no, that's an awesome question. And I'll kind of tackle it in a few different pieces, if that's okay.
Yeah.
So on the ESG component, you're absolutely right. Originally it was developed as a risk framework, right? Companies wanted to disclose their environmental, social, and governance risk. So if you had some kind of environmental risk or governance risk, investors should know that, right? They should know what they're getting into. I think certainly the term has been politicized. Even Larry Fink, I think last year said that he no longer is going to use the term ESG, and instead BlackRock is going to focus on sustainable investing. In that same time period, they've increased their quote unquote sustainable investments quite significantly, even if they're not using that formal ESG sort of label. And it's important because like a lot of what's driving, sustainable investing, ESG, whatever you want to call it, is investor preference, right? I think Bloomberg expects that sustainable investing or ESG funds could grow to 50 trillion by 2030, right? Today it's around, I think, 30 trillion. We recently presented, Bitcoin's sort of energy solution to a room of 3 trillion climate investors, 3 trillion AUM climate investors who'd never heard of Bitcoin before, and at the moment can't even add it to their own balance sheets. They can't invest in Bitcoin because they're worried about that environmental risk. And this is true not just in the US, this is true in Europe, all around the world. So on the ESG piece, it's important to know that a lot of this is coming from that people want, right, sustainable investments, and they want some kind of proof or auditability when it comes to making a sustainable investment. It could be retail that wants to know that they're funding, a greener planet. It could be young people that are increasingly adopting digital assets in Bitcoin, that they also care about the environment. But it's even massive institutional investors like, New York State Pension Fund, which has $500 billion under management and can't invest in assets that they deem, might be harmful to the environment. They're divesting. So the SBC in theory could be a solution there. It could be university endowments that are increasingly adopting, sustainability frameworks and ESG investing approaches, like Stanford or Harvard or whoever. So really all the SBC or all this data is doing is giving those investors optionality. To the second part of your question about Bitcoin miners and their choices of using clean energy and how that's going to affect, the equity markets, it's going to affect Wall Street. I think one of the big challenges up until now is that, and I actually heard a Bitcoin mining CEO say this to me directly. They said that at the moment, there's no ROI for ESG. So they want to be, they want to be sustainable. They know it's good for Bitcoin to show that these Bitcoin miners are adopting sustainable behaviors, but, they're not rewarded in the market. All we're doing at SVP is creating that market mechanism. We're saying you don't need a mandate, you don't need any kind of, intervention. All we're doing is pricing in the value of sustainable Bitcoin mining. And we're already starting to see miners adopting this practice of using sustainable energy. Right now, we have something like 20 to 23% of global hash rate signed up to use the platform to, share their clean energy mining data. And we're even starting to see Bitcoin miners like, Marathon recently became the first Bitcoin mining company to submit what's called a carbon disclosure report to an organization called CDP. I think this kind of thing is going to be standard practice before you know it, not just because of climate disclosures, not just because they want to sort of, appeal to regulators and lawmakers, but because they know that these funds, that these climate investors care about it.
Matt, anything to add on the kind of alignment of the underlying producers of Bitcoin, the miners and the long-term investors?
Yeah, look, I think Elliot nailed it. I think that the direction of travel here is 100% towards more and more clean energy sources because of the institutional capital that is governed within this framework, because of regulatory pressures or potential pressures and lawmakers. So I think it's something which it makes sense for the miners, but as Elliot says, and this is one of the reasons why we created the company, we created the SBC, is actually allowing them to monetize that sustainability so that their good behavior is financially rewarded. And then concurrently, it's allowing these investors to then get exposure and this optionality, which, that bridge. So I think it's direction of travel. This is exactly where we're heading. And the efforts of Marathon and a number of our mining partners to try and lead it is signaling to these investors that it's very much part of their core value and part of their business strategy.
Yep. And then describe, I guess, what is the investment opportunity broadly? Is it an institutional investor opportunity? Is it an individual investor opportunity? Is it a combination? What's the applicability of the investment case?
So maybe I could tackle this, and then Matt can add. What's unique about sort of this approach, creating an asset-specific environmental commodity like the SBC and applying it to Bitcoin, is that you're starting with institutions and then working your way down, right? Like, in theory, the SBC has value to anybody who wants Bitcoin and also wants some kind of proof that the Bitcoin that they're holding also contributed positively to the environment, right? But compared to sort of traditional Bitcoin, Bitcoin and other cryptocurrencies where you have this kind of grassroots adoption that kind of builds up, we're starting at this institutional level because they have an immediate need, right? They need something that's going to help them address whether it's SFDR regulations in Europe, climate disclosures here in the US or elsewhere. So the sort of adoption, the market adoption is going to be a little bit different. In terms of how large the opportunity is, I mean, Bitcoin, as we all know, is the best performing asset of the last 15 years. I mean, obviously, if an asset starts at zero and it's kind of easier to be a better performing asset, but nonetheless, investors are waking up to the opportunity that is Bitcoin. But there are still, again, 30 to 50 trillion of investors, of capital that's locked up, that we want to make sure not only goes to Bitcoin, but goes to Bitcoin in a way that demonstrably, funds the energy transition, demonstrably is supporting the environment. So if you think about like Norges Bank, for example, which is the pension fund of Norway, they have a screener. They won't invest in things like Bitcoin because they're worried about environmental impacts. If they were to be able to add, say, Bitcoin plus SBC, I mean, they're a $2 trillion fund. That opens up a whole door of opportunities. Matt, I don't know if you had anything to add to that.
That's a really, really important point. So, when I see the word protocol, and as listeners to our podcasts and webinars over the years have heard us, when we talk about protocols, we go all the way back, right, to the foundation of the internet in 1991, when there were lots and lots of protocols competing to create this interconnected web of computers, right? Because in the 1950s and 60s and 70s, there were no connected computers. Computers were standalone entities as big as a building. And then over time, they started to connect, and DARPA connected a few in the government, and everyone's seen the picture of the 5 nodes of the DARPA net. But in 1991, Tim Berners-Lee took this, at the time, little-known protocol, TCP, Transfer Control Protocol, combined it with, the base layer internet protocol, and wrote 9,400 lines of code and created the first web page. So the internet was born. Vint Cerf created TCP, I guess, years earlier, but he didn't get rich because he didn't own TCP. Certainly didn't own IP. And Tim Berners-Lee didn't get rich, even though he kind of immortalized TCP/IP as the base layer of the internet. And neither did the creators of FTP, File Transfer Protocol, or SMTP, or HTTP, now S. They added an S to it. So fast forward to today, we've got these protocols that people talk about: Bitcoin, Ethereum, Solana, Cosmos, Polkadot, whatever. Then you got a whole bunch of other stuff, the meme coins and the tokens that, yes, maybe technically they're also protocols, but I don't really think of them that way. Again, long question to say, how is Sustainable Bitcoin Protocol like a protocol, unlike a protocol? How does it enhance the actual protocol Bitcoin itself?
Yeah, happy to jump on this one. So it's not a protocol in that technical sense like Bitcoin, right? I mean, it is a protocol in that all we're doing is collecting data, right? The same way that Bitcoin miners are sending, hash rate to the protocol, and then they're getting rewarded in Bitcoin and transaction fees. We're collecting that same data. We're essentially adding to it 2 additional data points, right? That's the energy consumption on a per Bitcoin basis, or the energy consumption of the network, plus the environmental attributes of that data. In a way, you can think of it almost like a clean energy derivative of Bitcoin mining. So, the way that the base price of Bitcoin, or the floor price of Bitcoin, is going to be the cost to produce. The same thing with the SBC. The floor price is going to be this cost to produce, and it'll again follow this kind of derivative function of the Bitcoin network. An important sort of the characteristic of Bitcoin and a protocol, in my opinion, is that ownership of the asset gives you purchasing power, but not necessarily network power. I just think that that's very, very important to note. So in Bitcoin, obviously, you might be Michael Saylor or BlackRock, just because you have massive portion of the Bitcoin, or even Satoshi, just because you might be quote unquote an early adopter, or you manage to accumulate a lot of Bitcoin, doesn't give you control over the network or any more authority over the network than anybody else. So the same can be said about the SBC. If you are mining a lot of Bitcoin, if you are investing in a lot of clean energy, that enables you to have more purchasing power or more contribution to the network, but it doesn't give you more power over the network, if that makes sense. Does that answer your question, Mark?
Sure. All right. So, as you guys sat together in envisioning this opportunity, what gets you most excited, Matt, as you think about the future of building out this program and making it available to investors, and partnering with some of the great data centers of the future?
Yeah, look, I think it's multiple different things that get me excited. Certainly creating this incentive for Bitcoin miners and allowing them to get rewarded for their energy choice, I think is super important. The health of the mining industry and the ability for them to be able to continue to grow with different energy demand competition is going to be crucial for obviously the network. So at its core, we see our mining partners truly as our most important partners. On the other side, on the demand side, the institutional capital, to be able to say that we can hopefully bring in hopefully a huge amount of capital coming into the Bitcoin ecosystem that is climate focused, and that capital is helping create more and more clean energy Bitcoin and kind of decarbonizing the network. That is something which we think is going to be it's a huge mission, but we are incredibly motivated about helping to do that. And then ultimately, this concept that I mentioned a little bit earlier is the kind of second order effects that can happen as we create this and as it starts to now proliferate is, this concept of, sustainable Bitcoin financing and maybe even that can go then blend into sustainable data center financing. I think that is also something that can be extremely important as we look to, build out the infrastructure needed for not only Bitcoin, but AI and the reflective, the energy demand that's going to come with that. So that is, we feel like is huge areas of excitement and optimism of what we can offer and what we're super, super focused on.
I was just going to say, I mean, there's a lot, that excites me as well, about Bitcoin and about SBP. I think a few of the things that excite me about the work we're doing is that ever since I started learning about mining and first started hearing about FUD, it seems like we're constantly in these Twitter, internet debates, with some saying that Bitcoin's boiling the oceans, some saying that it's, the most green industry to ever exist. And, the truth is somewhere in between, but never before was there actual proof, right? Like at the end of the day, if I'm going to make a convincing argument, I want the data, I want the evidence, right? And what's amazing as a network is we're now creating this voluntary incentive where we're not forcing anybody to provide the data. We're not forcing anybody to prove how sustainable they are, but it's a truly market-based solution where miners are, they're proving not just that they're mining Bitcoin, but also contributing to the energy transition. I think in addition to this whole sort of FUD busting component, because of the way that the protocol works, the way that it, produces SBC and addresses the historically mined Bitcoin, it not only has the opportunity to make Bitcoin a, quote unquote, sustainable industry, but it actually induces the network to finance more clean energy than the network could have ever possibly consumed in its entire history, right? Because most Bitcoins were mined with very, very little energy, in the past. What this means is that Bitcoin doesn't just become, a carbon neutral or a green, asset class, but it has the opportunity to become one of the most powerful sustainable investments that you can have. So it's not just about unlocking capital into, from these ESG funds, but it's about saying, hey, if you want to show that you are a sustainable fund, you need to be investing in Bitcoin.
Elliot, can you rewind that? I think that is such a profound point that I really want listeners to completely hear and grasp and pause and memorize if we can, because I just think it's such an important point in distinction. So sorry to put you on the spot to rewind, and we can do it on the podcast itself, but live is going to be, I think, more powerful.
Sure. So today, and obviously the Bitcoin network, it's almost necessarily going to increase in energy consumption over time, right? Like we live in a world, since 1991, we live in a world that's bound by a digital infrastructure and not just a physical one. And that's what's amazing about the internet. It allows you to transmit information across space and time. Bitcoin is an extension of that. It enables you to transmit value across space and time in a digital way. Like that value proposition alone is just, it's limitless. Today, the Bitcoin network uses roughly about 160, 170 terawatt hours per year. To some people that might seem quite scary. That's more than some countries like Norway. At the same time, if you look at it in comparison to other industries or, even other consumers of electricity, I think it's something like 1/10 of the washing machines and dryers that we use in the United States. At the end of the day, the value of Bitcoin is much more than just its energy consumption. And that's actually also a really important point I urge your listeners to consider is if you're talking to somebody who's worried about the energy consumption of Bitcoin, it means that they're not actually worried about the energy. It means that they're worried about, what is the value of Bitcoin? What's the use of Bitcoin? Because if they don't think it's valuable, then even a kilowatt hour or a megawatt hour is a waste, right? So I think first we have to do a better job of explaining, how important having a permissionless, decentralized, monetary, system or option is for the world. Now, historically, the Bitcoin network actually consumed quite a little amount of electricity. I think on average, it took, only a couple of kilowatt hours to mine the first 5 million Bitcoin, less than a megawatt hour to mine the first 10 million. And it was only once we got into the 17 millionth Bitcoin unlocked from the protocol did we get to a point where it took about 100 megawatt hours to mine each Bitcoin. Today, that's around 1,000 to 1,200 megawatt hours. So the network is, necessarily going to increase, and it's going to use more and more energy over time. We can get into a whole conversation about how, we think this is going to be predominantly clean and stranded energy. But it's important to note that, in the last 1 or 2 years, Bitcoin network used more energy than the rest of its history combined by far. Right now, when SBP, the way our protocol works, is, we can issue SBC to Bitcoin miners, on a regular basis. They are, let's say a Bitcoin miner in North Carolina, they have a solar PPA. So they consume 1,000 megawatt hours of solar energy. They mine a Bitcoin, they receive an SBC. In order to address the, whatever, it's 19 point something million historically mined Bitcoin, in order to ensure fungibility, we also need to be taking the present day energy consumption of the network, that same 1,000 megawatt hours, and apply it historically. That means, let's say if you're BlackRock and you buy an SBC, statistically, the Bitcoin in your portfolio are going to have a very minimal energy consumption, but you're far overcompensating for its energy use by several orders of magnitude. That means that as SBP scales alongside the Bitcoin network, it becomes more and more climate positive, which is a really important term. It means that it's not just, compensating for its environmental impacts. It's not just carbon neutral. It means the asset and the network are having a net positive effect on the energy transition. I hope that kind of that translates.
No, it's great. It's very helpful. And one of the things that I've talked a lot about over the years is, and you touched on this, that look, everything in life is about converting energy to value, right? From the dawn of human existence, which sounds like hyperbole, but true. People put fuel into their bodies and then went out to create value, whether that was in the early days hunting and gathering, whether that was, creating cities and countries and habitation and infrastructure, whether that was, discovering electricity and making power available to the masses, whether that was harnessing, the natural elements like hydro to generate that power, whether it was the creation of media, to make the printed text. I mean, there was a time, this is crazy, before the internet was really getting started, the most valuable asset was Encyclopedia Britannica. And then Encyclopedia Britannica.com was the most valuable asset on the internet. And then Wikipedia replaced that because it was better to have a global knowledge base as opposed to a bunch of people in a room deciding what was truth and what wasn't. So, we've migrated over time, and every industry that we all live with, right? Think about the chair you're sitting in right now, the media you'll consume on your ride home tonight, the food that you will cook, all of it is consuming energy that at the end goes to fueling ourselves to create something of value, whether that's a happy and healthy family, whether that's, some great investment opportunity or whether that's a magnificent work of art. So I think your point about transferring value across space and time is something most people don't really understand and appreciate. And it is one of the aha moments in coming around to Bitcoin. And one thing is, once you do have that realization, you don't have enough, right? I mean, the average person just doesn't have enough. or the average corporation or the average investment firm. Because once you realize that ultimately Eric Schmidt was right when he said a number of years ago that what Satoshi Nakamoto gave us was, yes, Bitcoin, and it's a wonderful thing, but what he really gave us was the ability to create a unique asset in the digital world. And we will live in the digital world, right? We lived in the analog world forever, and then we lived in the electronic world for a few decades, and now we will live in the digital world for the foreseeable future. And having that ability to transfer things of value, but to also store things in a permanent structure, meaning, immutable, permanent, known, agreed upon, is incredibly valuable. And that's what the Bitcoin blockchain is. I think the thing that you said, Matt, that I would like you to double tap on maybe a little bit is, you said proof of sustainable work. And I think what's interesting about that is I will argue that proof of work is what all of us as human beings aspire to, right? That's how we validate it. It's that proof of our work, that effort that we expend to do what we do in this world. And Bitcoin to me is the digital version of that, and why it's superior to all other forms of a base layer protocol. And having a network and a computing system that is the most powerful, the least hackable, the most fault resistant is incredibly valuable. And having the energy to power that be sustainable and increasingly lower cost and increasingly efficient is what everything in history is done, right? The first cars got very few miles to the gallon, and then they got better and better and better. They got more efficient. So again, super long question, but thoughts on that?
Yeah, look, I think it's fascinating. I think the future state of where we're heading is, to Elliot alluded, the ability to source clean energy and attract different industries that can then go and find different sources of clean energy is really why the Bitcoin mining industry is so fascinating in this clean energy transition, because of their geographical, they're agnostic geographically. They can go to these new sources of either stranded energy or clean energy, which is at its core, going to be incredibly important as we continue along this energy transition into this digital age that you speak about, and comes with a rapid and ever demanding increase of energy demand. So, look, the key that we've always said with what we've been building is it needs to be data backed, and it needs to be auditable data. And part of what we're doing there is making sure that that end investor has the confidence to stand in front of their board, shareholders, stakeholders, and say, look, this is a data backed clean energy environment, a commodity that gives me exposure to this Bitcoin. And that, that always comes from making sure you get the data.
Yep, absolutely. All right. So as we come up on the hour, we are super grateful for your time and for sharing your wisdom and for me, the enthusiasm, right? You can hear it in your voice. It's said, right? If you do what you love, you don't ever work. You just do what you love. And that's so fun when you find yourself in that spot where you guys are today. So if people want to learn more, get to know you better, where can they find you?
Thank you again for having us. It's a really fun conversation. I'm sure it's the first of many. We'll have to, do more in person. If you want to learn more about SBP, you can look us up online. Our website is sustainablebtc.org. You can find our white paper. It explains how we're doing what we're doing. You could also follow us on social media. We have a LinkedIn page, a Twitter account. Reach out to me or Matt if you want to learn more. And yeah.
All right. Well, guys, again, thank you so much. We will have another conversation as a follow-up for sure. And we appreciate you sharing your wisdom and enthusiasm with our listeners, and look forward to many happy returns for us, for Bitcoin, and for the ecosystem at large. So thanks for what you do.
Thanks, Mark.
Thanks so much, Mark. Appreciate it.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.